This is MJ Forest, guys. I want to really apologize for the little silent break that we have experienced on the MG industry. And second, I was a little bit busy with stuff, especially exams recently, so that was one of the basic reasons. But meanwhile, guys, we are back. We are back, and I've stayed a little bit. I've discovered that some of the basic challenges that people are having on this industry, let me say in the forex financial market, is knowing when to buy and when to sell. That is knowing when to know the market and when to how to predict the market. And recently, I think I've been receiving questions on how to buy and how to sell any instrument. So I think this is one of the basic things that prompt this video basically. So now this video will help you to build your mindset on how to buy and sell, how to navigate the financial market. And secondly, if let me see, maybe you are new on this channel, I want you to smash on the subscribe button so that at least I will know that you are part of the family, guys. And also you should also smash on the alarm button so that just tap on the alarm so that if there's any video that's to do with these guys, you'll be notified ASAP. Because basically in the financial market, the truth about the financial market is that there are many information in the financial market, especially in the forex industry. There are many information, but the choice for which information you select is very, very important. So meanwhile, we'll still navigate on this. Okay, now let me take you to some of the theoretical aspects, because I believe that it is more important if you get the theoretical knowledge or the insight behind this before navigating on this in the practical aspect, guys. So let me take you guys. Now I told you guys that this video has been titled trading strategy. So what is trading strategy? Trading strategy are defined set of rules that a trader uses to make decisions on the financial market. I told you earlier that one of the basic challenges I have seen is the ability to predict the market or knowing when to buy and when to sell. These are the basic problem that has been a challenge, a basic challenge on traders, especially beginners in the forex industry. So I'm trying to let me see that I simplify this concept for you so that you get to understand that at least you have a basic insight on how to navigate the forex market, especially if you are using in the style of technical analysis. So as I have said earlier, I said trading strategy is a defined set of rules that a trader uses to make a decision on the financial market. So now it is the basic guidelines for making decision in the financial market. Now there are basic elements that every trading strategy should have. The first one is a trading strategy. A good trading strategy must show you when to enter the market, that is when to buy or sell. At least every strategy should tell you that at this point, this is what you should know, this is what it should point you that you need to buy and sell. Secondly, every good trading strategy must show you when to go out or to close trade, because the problem is not only entering the market, you also have to know when to leave the market. And thirdly, every good trading strategy must show you when to stay away from the market. You don't need to be in the market always, because if you are always in the market, you will always be losing the market. There are times that you don't do many things, so there are basic times that you need to stay away from the market at this time, because there is no need for you to be in the market. There are facts about trading strategy. There are basic some things I want you guys to get about a trading strategy. The first thing is that trading strategy don't control the market. Now they are just guidelines into the market. Now no matter how good your strategy is, your strategy cannot control. You don't control the market. You cannot control the market. You are just one of the participants one of the individual that navigate the market, but you cannot, no matter your liquidity is, you can't control the market. So one thing that you need to know is that this your strategy, they are just like guidelines on how to navigate or how to like walk through the forex market. The second aspect is that not all strategy can be applicable to all instruments. Why? Because each instrument its own behaviors. Now you cannot, it's not every, even though there are particular strategy that I can use on all instruments, but there are very few. Not all in strategy can be applicable to all instruments. Maybe let me say, for example, we are trading forex. Let me say you are trading GBP/USD. The strategy that you are using on GBP/USD might not be applicable to maybe the strategy that you use on Bitcoin, maybe crypto, because the each set of instruments have their own unique behavior. So it means what you are expecting to see on this particular set of instrument might not be what you end up seeing the particular set of instrument. So, and the third thing is that there's nothing like 100% winning rate strategy. Why? Because you are not the one that controls the market. No matter how your strategy is good, you cannot have 100% winning rate. There are times that maybe you experience a little change and your strategy, you have to adjust. That's why there's a need for you to be consistent in the market. Even though you have a good strategy, have an edge, you have to be consistent, active in the market, so that in case if there are different scenarios that occur in the market, maybe you were able to like filter some of things and adjust some things. So this is, guys, now types of traders. Now there are basically 4 types of traders, even though they are more than, but there are basically 4 types of traders. These types of trader has to do with how you can trade any forex instrument or any financial instrument. The first one is as a fundamental trader. You can trade, you can build a strategy based on financial fundamental style, or as a fundamental trader. Now fundamental trader is just like they are trading style that involve the use of basic or fundamental factors that have impact on an instrument, let me say, such as economic data, political decision, and geographical changes. Now each instrument they are trading, let me say for example you are trading GBP/USD, that is, you are trading forex. Now you know, once you are trading GBP/USD, it means you are trading pounds and dollars. So there are basic things that can affect to countries that is related to dollars, that can affect the rising and the falling of dollars. That is one of the factors in their economic data. If there is fault in the economic balance, it can affect their currency. If there's maybe new political decision that came on, it can affect the currency. If maybe let me say the geographical factors changes, like maybe any disaster or any negative impact or positive impact, it can affect the balance of the. So these fundamental traders, most of the basic data that they use is they use some of these data, the economic data, political decision, geographical things to predict the future price of a currency. Or the second kind of traders is the technical traders, or trade in technical style. These are traders that make use of chart in order to determine future direction of an instrument. It means now there's a specific chart, they use chart, they have their own technical tools that they can like analyze the chart to make future direction, to determine the future direction of any instrument. Now the third kind of trader, and especially this the MJ trading platform, this is one of the basic things that we are going to use. I think 80 to 90% we are going to equip you guys on how to navigate the market, because we are 80% technical traders. So the third kind of traders are the sentimental traders. Now this is based on making decision based on another trader's opinion. Let me see, maybe you have someone that is very good in trading, that understood what any in the instrument maybe they are trading is. Let me say for example you have someone that is good at trading GBP/USD. So once he's telling you is buying, so you buy based on his own opinion, or maybe he's selling, you sell based on his own opinion. And the last kind of traders are the intermarket traders. Now this is making decision based on the relationship between instrument. Now let me say you discover that there's correlation between these instruments, and because there are some instruments that once they are going up, the other one is going down, or once they are going down, the other one is going up, or maybe once they are going up, the other one is going up. So you are making your decision. Once you see the other instrument going up, and you know that ideally the other instrument should go up, then you make your decision based on the behaviors of the other instrument. So now these are the basic four kind of traders that we have in the financial market, or the kind of style that you can use to trade any financial instrument. So basically you are going to build your trading strategy using one of these. It's either you build your strategy as a fundamental trader, so you are using news, you are using political decision, geographical impact and changes, or as a technical trader, maybe you are using chart, you are using your technical tools to determine future direction, or maybe sentimental traders, let me say you are using the opinions of other good traders or people that you are sure of to make your trading decision, or maybe you are an intermarket trader. It means you are using correlation, you are using the relationship between two or more peers instrument, or let me say instrument, to determine the decision of any instrument that you are trading. Element of technical analysis. Elements of technical analysis. Guys, for every good, because I told you guys earlier that we are going to use technical analysis, because I think I'm a technical trader. So basically I'm 90% technical, 80 to 90% technical traders. Even though I make use of fundamental style, I make use of sentimental and our market style, but I'm basically 80 to 90% technical traders. So I'm going to walk you guys on how to predict the market future direction and make trading decision based on technical analysis, or as a technical traders. And every technical analysis or technical trader should at least have this basic instrument, this basic element. The first element that you should have is that you need to determine the instrument that you are going to trade. Number one, you need to know that you need to settle your mind on which instrument you want to trade. Let me say, for example, for example, in this particular video, we're making use of GBP USD. That is forex. We'll be trading forex. That is a specific currency, GBP USD, because especially if you're a beginner, it is very important that you get a particular single instrument that you trade, because the issue of trading over instrument is that you'll be doing many things. And I told you guys earlier that each instrument or every class of instrument have its own behaviors. So it means if you have built your strategy on this instrument, you can't expect your strategy that you have built on this instrument should be working on that, even though there are some that can be applicable to all instruments, but they are very few. So for a start, as a beginner, especially as a beginner, what our advice is that you stick to an instrument. You stick to one instrument. And for this, I told you guys I will be using forex, that is the currency pairs GBP USD. You'll be trading pounds to dollars. The second element of a technical analysis is the type of trader you have to determine, because I said something concerning types of traders that we have I think in one of the videos, so maybe you have to go and make reference to the video. I told you guys basically there are 4 to 5 kind of traders that is under technical analysis now, not under general aspect of trading, now under technical aspect analysis. I told you guys that you can be a scalper. It's either you are a scalper, or you are a day trader, or you are a swing trader, or you are a position trader or long-term trader. So maybe if you didn't understand this, you have to make reference to, I think, beginner's guide to forex trading. I think that's where the video, this lesson has been spoken on. So you have to make a reference. For me, for now, on this video, where I'm going to make reference to the type of trader that you'll be as a day trader. So that's day trader. I told you guys that day traders are traders that they are just after what the market will give them per day. Now the third aspect is a time frame. I told you guys still in that same video, I think, what a time frame is. So you have to still make reference to that one. So as a day trader, now we make a reference to 4 hours time frame, 1 hour time frame, and 15-minute time frame. So now these are one. Even though as a day trader you can still make reference to 1 day, 4 hours, 1 hour, and 15 minutes. So these are the time frames that we are going to make use of as in day trading. Because if you are a scalper, your time frame varies. If you are a swing trader, or your time frame varies. If you are a position trader, also your time frame varies. But for this lesson, we are going to make use of this basic time frame, because these are the time frame that day traders mostly use. Even though you can use at with 10 minutes, 1 hour, or with 5 minutes. But these are the basic one time frame that we are going to make use. Then the fourth thing is you have to determine your strategy or strategies that you are going to use. What do you want to use? Which strategy you want to use? You have to determine, because it is very dangerous for you to be in the chart as a technical trader. Then you'll be it's at that point that you'll be thinking of what am I going to do. No, before you even approach or you buy or sell any instrument or you buy, let me say for example GPSD for this case study, you have to know that this is what I want to use. And for this lesson, the basic trading strategy we are going to use is what is called order block, and we are going to use order block with trend lines. Now I'm going to show you guys how to make your trading decision as a technical trader using an order block that is with trend line. But before we still go to the chart, let me just explain to you basically what an order block is and what a trend line is, because I believe that some of you guys are beginners, because I want you guys to build understanding on the basic aspect of this before we go to the chart, guys. An order block, we say now an order blocks, they are candles or reference point where the market maker, that is huge funds or banks, place their buy or sell position, and we reprise to pick those orders. Now I learned this by HB Francis. HB Francis is a very good trader. He's owner of Charis Trading Institute, that is in Nigeria and Maiduguri. So this an order block, this is what an order block is. So now order block is a particular candle, and once you see this candle in the market, it's just like pointing a reference point that the market makers, that is the huge funds or the bankers, are present in the market. So once this candle is an indication that the market makers are present, and mostly once you see this candle, it means that price will rise. Even though price is going up, it has to come back and pick it before it went. So I will teach you guys later on how to use this. There are basically two types of order blocks. The first order block that we have is a bullish order block, that is the last bearish candle before a bullish movement. And the second order block that we have is bearish order block, that is the last bullish candle before a bearish movement, guys. Now let me just show you guys in a simple aspect what an order type of an order block is and the types of order block. Now we said a bullish, we have the bullish order block and we have the bearish order block. Now we say in the bullish order block, the bullish order block is the last bearish candle before a bullish movement. It means you see now this is a bullish movement, the market is going up. You see it is going up. So this the bullish order block is the last, this is the bearish candle. Now the sell candle is the last sell candle before any conservative bullish movement. And I told you guys that once you see this candle, it means price have to come back and pick the candle. It has to pick price, because this is an institution that are huge funds, the banks that are current in the market. So price have to come back and pick it before going up again. For now, this is another example. We say the last bearish candle before a bullish. You see this is a bullish movement up. So now this is the last bearish candle. So you have, your job is that for you to identify a bullish order block, you have to identify a bullish movement. Once you identify a bullish uptrend movement, then you check which candle is the last bearish candle, the last sell candle before that moment. So you identify that candle as a bullish order block. And the same thing when it comes to bearish order block, the last bullish candle before a bearish movement, you see it means the last buy candle before the market went down is a bearish order block. The same thing, price have to go up first and pick it before going down. This is the same thing. You see, this is a down candle, this is a bearish movement, so you have to identify the last bullish candle before the bearish movement. Then what a trend line is. Now a trend line is a technical tool that indicates a diagonal flow of liquidity. Now in just a non-sharing, a simple way, when we say trend line, this is a trend line. What a trend line is, you see a trend line, this is a trend line, and this is trend line, and this is a trend line. Now when we say a diagonal movement, you see it is slanting, this is a movement, this is a movement. Even though you can make you can draw line, use trend line to draw horizontal or vertical line, it depends. But the main aspect of a trend line in this video that we are going to make reference to is to indicate a diagonal flow of liquidity. You see, as price is going up, this trend line is indicating the way the trend line, the market is going up. So now guys, these are the basic things I want you to understand. What a trading strategy is, some of the elements of a trading strategy as we have said earlier, then what an order block is, some of the elements that defines a good trading strategy, a technical analysis. I told you guys, I think I told you there are 4. So now basically, and I told you guys that in this one we are going to start making use of what an order block is and a trend line. These are the basic tools. I told you, like, as a technical trader, one thing that you make use is that you analyze the charts using some defined technical tools, some basic indicators, etc., to determine future price of currency of any instrument that you are trading. So now guys, let me take you to the chart. This trading view, and I told you in this video we are going to make reference to GBP USD. That is, we are going to be trading the pounds against the dollar. So if you are, like I told you guys, basically they are basic element of every technical analysis. For you to make a good technical analysis, there are some element if you want to like build a trading strategy. I told you one of it is that you have to know your trading instrument. This where you see your trading instrument on maybe if you are using trading view, or maybe you can use MT4, you can use MT5, anyone that you want to use. But in this where you see your trading view, this where you see your instrument GBP USD. If you want to change it, you can still change it. These are different classes of instrument. You see it, these are different, there are different classes of instrument. You can trade stock, you can trade, these are stock, anything that you want to trade. These are funds, these are futures, forex, this is crypto. Maybe you want to trade Bitcoin, Ethereum, being any, these are different. These are index, they are index, different stuff, DXY, US30, US100, all these are bonds. So any instrument there, but I told you in this will be trading forex, and under forex will be trading GBP USD. So, and I told you guys secondly, you have to determine the kind of trader you are. I told you that for this we are going to like build our trading strategy as a day trader. That's, it means we are just after what we are going to get per day. And I told you totally that one of the things that you need to know is that the time frame that you're going to trade. These are where your time frames are. You see there's 1 day, there's weekly, there's monthly, there's 3 months, etc. You can check here, you see different time frame. But I told you guys for now we'll be using 4 hours, 1 hour and 15 minutes. Even though maybe later we can use at 1 day and 5 minutes, making more decision. But basically as a day trader, these are your major time frame. 4 hours, 1 hour and 15 minutes, guys. So, and I told you guys that lastly, one of the things that you need to know is that you have to get a strategy. And I told you that the strategy that we're going to be using is we're going to use an order block and a trend line. So this is what a trend line is. You see, this is a trend line. So what we are going to use this trend line for in this video is that we are going to use it to determine our market structure. You know what we said recently about market structure? I told you that you don't go against the trend. The trend is your friend, so you have to follow. If you see the trend is going bullish, you have to go bullish, because I told you that you don't control the market, and you don't control your strategy. Don't control your strategy. Cannot stop this market from here from going up. It can't. But you can only use your strategy to know when you need to enter and when you don't need to enter, when you need to leave the market or when you don't need to leave. But that's when you need to buy or when you need to sell, when you need to remove your money, and when you need to even avoid the market. So these are the basic things that this strategy, this concept will teach you, is to show you how to navigate all what you need to do at a particular time when you see each candle or when you see the chart pattern. I told you these are chart pattern because as a technical trader, I told you that we make use of chart pattern. We make use of chart. This chart here, everything that is here is what we call a chart. There are different things on this chart, so we make use of these candles, we make use of the moves, everything that is going here. This is what you're going to like determine future price based on the activities. And we do believe as a technical trader that whatever happened before can happen in the future. So this is how basically you build your trading, you build your future decision on. That is the activities that goes on in the previous days, years. The past event will determine the current event. So guys, let me show you guys what an order block is. And just as I said this is the trend line. This is what a trend line is. This is what a trend line is. And I will also show you guys some basic things on this. Okay, let me wipe this out. The chart is a little bit messy. Let me wipe this out. Let me wipe this out. I'm trying to see this. Okay. So now I'm on the first thing that you need to do is that you have to go on your 4 hours time frame. What you need to do on your 4 hours time frame is that you have to like determine your major structure. That is the real structure of the market. So your 4 hours will tell you that this is your major structure. So you like zoom it in. You see, in long move the market is going up, so what you need to do is that you go down. You can check here. See here, these are different functionalities. You pick your trend line. You see, this is your trend line. I have it here. I look at it here, but this is my trend line. Here there are different stuff, you see, but this is my trend line. You see trend line, you pick your trend line. So what you are going to use your trend line for here is that you use it to indicate your major structure. You know what we say market structure? We say on market structure there are 3 kind of market structure. There is bullish, there is bearish, there is consolidated. So now here you have to check your market structure. This is your market. You indicate your structure. You see, it's telling you that it's bullish, right? This is bullish. This one and this one touch here. This you check where there is touch, you indicate it. So this will help you to know that this is your market structure. So your major market structure is bullish. Then you are going to go to the 4 hours time, 1 hour time frame also to indicate your current market, because I told you that we are day traders, so we are just after now. If you are following this major structure, you see it started from here. That is May when. So you can't like make your decision here. Make your decision. It's May 2022. You see it. Okay, May 2024. You see that is going to here to here. So we are not after this. This is a very long move. So we are just after short move. So you are going to go to for 1 hour, get your current move. You see, even though the major structure is bullish, but the current structure is bearish. You see it here, it's going down. It's going down. It's going down. So you indicate it from here. You see it, you indicate it here. You check for where there's like at least 3 touches. At least 3 touches. Where there is like 3, so you can zoom it, check where there is like at least 3 touches. you see 3 touches, you check for like at least 3 touches. You see here, you indicate your where there's at least like 3 touches, a clean touches. So you see, it means sorry, network. Okay, we are back, guys. So you see our current structure is bearish. It means now, since our current structure, we are just after our current structure is bearish. So all what we are going to do is that we'll be looking for a sell opportunity. I told you don't go against the trend. We'll be looking for our sales opportunity. So now we are going to look for an order block. I told you there are 2 kind of order block. It's either the bullish order block or the bearish order block. Since now the market is going down, now we are going to look for what? We are going to look for our bullish order block. We are going to look for our bullish order block so that we'll get selling opportunity. So now we are just looking for where there is bullish. We say the last bearish candle before a bullish movement, the last bearish candle before any bullish movement. So we are going to look for, let's go to our, you can go to your that's our 1 minute, 1 hour. We are going to look, let me check where our order block is. Our last look at one here. So this, we are going to use one of the tools. You can use this rectangle, you use it to indicate this our order block. This is an order block here. This is an order block. You see it, you tick it. After you have ticket, then you see, you wait for the price. It's now this where our market was. Our market went down. I told you, once the market is going bearish, you'll be looking for selling opportunity. So once you sell, because the market is when you don't go against the trend. So now this our one, and you just tick it here, you allow it. You see the market came this side. The market went down a little, then it went down. You see it went this down, it came back again to this zone. So it means what you just need to do is that this way you sell, you tick your sell here like this, you draw it like you go down, you know that you see where it is. This is your order block, your bullish order block. That's the last bearish candle before any bullish movement. You see, now you tick it here. The first thing that you need to do is that you need to identify the order block. You identify the order block here. Once you identify this order block, you just indicate the place. You say I indicate using this, then you allow the market to go. So the market have to come back, because I told you guys that price need to, the price action need to come back there. Market need to come back there and touch it and pick it before going down. So you just like tick it. Once you tick it, like you tick it, you use this. This is what is called a sell functionality. This is a selling tools. There's a buying tools. This one will indicate is indicating selling order. So you see this like red that is sell means your stop loss, and this one that it means your target. So it means from here, this way you enter the market, this place is where you enter the market. It means, you see, it's giving us almost, this market gave us almost you see 30, we are giving 35.1 pip to get 100 pips. So it means this even more than 1:3. So the only thing is that you draw this your stop loss, let it be above the last and the tip of the order block. You see this where the order block is. So this have to be above the tip of the wick, the top of the wick of the order block. You see the order block here. So you just allow it to market there, allow it. Just go, you see the market went down and it came back here. You see now the market went down, and so it means from here this was a profit. And let's look for another example also. Let's look for where an order block call. Let's see an order block. Say the last we see the last bearish candle. Since we are in the last bearish candle before any bullish movement, before any bearish order block, okay, sorry, I mean guys, the bearish this bearish order block and the last bullish candle, I mean to say the last bullish candle before any bearish movement. This is bullish candle, this is bullish candle, and this is bearish movement. So we need to identify our bullish candle, sorry, not bearish candle, bullish candle. This is bullish candle. You identify the bullish candle, price came back to the bullish zone. So this is where the tip is, you see it, this is bullish candle. So the last bullish candle before any bearish movement is called a bearish order block, a bearish order block. You see it's also occurred here. This another one, but this one is too tiny. I don't want to make a reference to this one. Yeah, we can still use this as an order block. We can still use this as an order block. Can still make use of this as our order block. The last bullish candle before a bearish, because now we are looking for sales opportunity. Once you see the market is going down, it means what you'll be looking for is selling opportunity. You are going to sell. And once you see the market, your current trend now, 1 minute trend, not 4 hours, once you see your 1 hour trend, sorry, is going down, is bearish structure. It means you'll be looking for selling opportunity. And once you see your current trend going bullish, going up, you'll be looking for buying opportunity. It means if you see your trend going down bearish, you'll be looking for bearish order block, the last bullish candle before a bearish movement. See now this a bearish movement, so we're going to identify the last, even though this can be taken but it's too tiny, so I'm going to make a reference to this one. This is our last bullish candle, that a last bullish candle before a bearish movement. You see price went down, it came back here to this zone. So once we see price around this zone again, what we are going to use is that you carry your sell functional. You see it, you carry your sell functionality here, you just place it, we enter the market at this zone, carry it. You see price gave us that is 104 people. You see price still came back and retested the zone here. You see it, price came back and retested the zone. You see price came back here again and retested the place. You see it, it packed liquidity, it went up, it came back to the place, it couldn't pass it. So it means you just be targeting this. Once you see price around that zone, at least once or twice, you sell here. You just anticipate like let me see a 1:3. If you are giving like 1%, you can anticipate 1 or 1:2 or 1:3. So this is basically on bearish order block. Let me show you guys what a bullish order block is. You see in this aspect, our current market structure is bullish. You see it is bullish, is bearish. So I'm going to, let me look for a scenario where our current trend is bullish. I told you in a bullish market you look for a bullish order block, and in a bearish market you look for a bearish order block. So let me get rid of this trend line. And I told you guys the use of this trend line is that it will help you to monitor your market structure. You are not trading this, but it will help you to monitor your market structure. You are trading order block. This is the strategy. You are just after where once you get your market structure, what is your market structure here? Your market structure here is bullish. The next thing that we're looking for is your bullish order block. So you see when there is a bullish move, so you check your last your last candle, let me check the last bearish candle, last bearish candle, last bearish candle. Last bearish candle, very bullish movement. Last bearish movement, last bearish candle coming. Last bearish candle. Let me change time frame. So you look for it. That's why you have to see it. If you didn't see it, you have to see it. Look at one, guys. You see here, you see this one. Look at one here. We see here, this is what happened. We see the last bearish candle for a bullish movement. Look at one here, you indicate it. You see it? You see it, guys? So it always works once you can identify it. You see it, this is the bullish movement, it went up, and this is bearish, this is the last bearish candle before this movement. So you see price went up, it came back to the place and it picked this, and once it picked, guys, let me show you what we got here. That is almost almost, this is 97 pip. This 97 pip, guys. So now this the basic way that you can trade the financial market using an order block. So what you need to just identify, number one, is the market structure. Once you get the market structure, you use your trend line to indicate your major trend, and you indicate your minor trend, that is your current trend. Once 4 hours, you use 4 hours to indicate your current your major trend. You use 1 hour time frame, you indicate, you check for your minor, your minor or your current trend. The only thing is, since we are in bearish, we check if the trend is bearish. You make use of your bearish order block. That is the last bullish candle before a bearish move. Just indicate it. You can indicate it. Once you indicate it, then allow the price to go. Surely price, once you see price come to that zone again, you place on sell, because price will go down again. So you see it here. This is just a basic tip. So it's very simple, guys. It's very simple. Don't forget, if you're new on this channel, you smash in the subscribe button, and also you tap on the alarm button, so that at least once any video that has to do with this comes, I think you'll be one of the first person to be notified. So thank you, guys.